Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy, and I am here with my husband, Noel. We are a husband and wife team. So tonight, first off, I am never on this late. This is the first time I am on this late, but I am trying something new, trying to fit in a new time and appeal more to both coasts. And so I'm trying to do something that is West Coast friendly as well as East Coast. So hopefully that'll work. Hopefully we'll get some West Coast people in tonight. A little bit about me. This is going to be our tax shows. It is a weird time, isn't it? It just feels weird to be on so late. I am going to be doing tax shows every Tuesday night, a variety of topics. So I kind of have like a planned out schedule of topics, but I will always answer any questions that you have. So I'll probably talk about the topic and then we can just kind of do Q&A, ask any questions you have on accounting or taxes. So I am trying to keep this one focused on accounting and taxes. I do a buyer and seller support on Friday mornings where we cover anything under the sun. So just kind of whatever it is. Thank you so much. I appreciate that, but I'm probably not as organized as it appears. Sometimes it just looks better than it is. Tonight, I thought we would just start off really simple at the very beginning on what is a hobby versus a business, because the IRS really defines those two things separately. So we'll talk about that. If you don't know me, a little bit of background. I am a CPA. I'm licensed currently in 2 states. I have been a CPA for a little over, I've been in the industry for over 30 years. I've been a CPA for going on 20 years. No, not quite. Going on 15 years. I've been licensed, but I've been in the industry for many, many years. So I have some experience to draw from. I do have a master's degree in taxation, so I do have some background in tax. And I have worked most of my professional life as an auditor, which sounds so exciting, right? I am licensed in Maryland and Pennsylvania currently. I used to be licensed in Florida and Georgia. However, I no longer practice in Florida or Georgia, so I don't need to be licensed there anymore. I live in Pennsylvania, and the home office I work for the company that I am employed with during the day is out of Maryland. So I have to be licensed in both states. So that's that. We've talked about a weekly plan, so let's kind of talk about different topics each week. I will be putting out a PDF every week on the topic I'm talking about. So I'll pin that now. You do not have to buy it. If you want to listen back to this show, you don't need to buy anything to listen back to the show. Let me just get this one pinned. We are on YouTube, so we stream everything to YouTube. So if you don't want to take notes and you want to go back and refer to this, you can go to YouTube and rewatch it. And then that way you can just kind of fast forward back and forth to the spot you want. Or you can always buy the PDF, which kind of summarizes it in print if you are more of a visual type learner. So with that, let's go ahead and just kind of jump right into it. And again, if you guys have any questions, I'm probably planning on being on tonight an hour and a half. Good evening, Custom Wood Burning. How are you? And yeah, the man behind the camera is my husband. About an hour and a half. Taxes and accounting is a pretty heavy subject, and anything more than that, it kind of starts to lose people. So I try to keep these topics to a little bit constraint time frame there. All right, so hobby versus accounting, or hobby versus business. Why is it important?
Hello, Ms. Marshall Pilo.
All right. The IRS, why it's important is the IRS is very particular about if you are running a hobby or if you are running a business. They are taxed differently. So the IRS can make that determination for you, but you don't really want them to. This is something you need to know ahead of time. And there's a lot of talk floating around. We hear this on Whatnot. Oh, this is just a hobby for me. I do it for fun. But are you really? Is it really classified? If the IRS were to look at that, is it really classified as a hobby? So that's what we want to talk about, is how does the IRS view it so that you can start to kind of say, hey, maybe I need to change what I'm doing, or maybe I need to do something, a little bit different, or no, I am a hobby versus a business. So just right off the bat, the IRS looks at whether your activity is carried out with the intent to make a profit. If it's intent to make a profit, it's a business. That is a very simple, definition. We actually have some factors we're going to go into. We have, I know there's like 6 factors that the IRS will look at, and we'll talk about each one and what does that look like for you as a whatnot seller. But I just high level, when we talk about a business, what is a business? A profit motive, right? You're doing something to make money. So that's your primary goal. You're keeping some type of records. Hello, wandering through life with me. How are you this evening? So if you're a business, the IRS thinks that you're doing some type of record keeping. Maybe you're not on top of it all the time, but you're keeping your receipts, even if they're in some type of shoebox. You're, making sure like, hey, you're using language that says, oh, this is a write-off. I can use this for my business. Maybe you might be in business then if those are the way that you talk, right? Hi, Moody. Let's see. Consistency. Are you operating on a consistent basis? So we're talking about how does the IRS view you if you are a business? Now, what if you're doing pop-ups whenever you feel like it, but you consistently do pop-ups? So maybe you don't have a show every Monday at 4:00 in the afternoon, but every week you're doing pop-ups week after week after week. That's consistent. So even the inconsistency of a pop-up could be looked at as consistent if it's something you're doing on a regular basis, right? Your expertise and your effort. That's one of the things the IRS is going to look at to determine if this is a business. Do you have the knowledge about what you're doing? Are you devoting time and energy into what you're doing on a regular basis? Do you devote time and energy to improve your profitability? So are you looking for ways to make more money on Whatnot? And I'm going to use Whatnot consistently, but this applies to any platform you might be on. And then your financial risk. Have you invested money in this? Have you gone and bought inventory? Have you taken money you've earned and reinvested it? So those are all kind of like those. Thank you for sharing this stream. I appreciate it. Those are the big things the IRS is really looking at for if it's a business. We're going to dig into those just a little bit more. But let's talk about what does the IRS look at if it's a hobby? So we kind of defined what they think of as a business. What about a hobby? IRS says they're going to define it as a hobby if your purpose for doing this is enjoyment versus profit. Now, don't get me wrong. You can be doing this for a profit and totally enjoy it. I do. I love being on Whatnot, but this is my business. I'm doing it to make money. But a hobby, your primary focus isn't the profit. Your primary focus is, hey, this is just fun. This is my social activity. Okay. And so the fun mindset versus the profit mindset. And you're inconsistent or it's a minimal attempt. Maybe you'll come on a Tuesday. Then, who cares if you're on for the next 3 weeks? Then you might pop on again. So you kind of see that difference between, even if I'm doing pop-ups, but I'm on it week after week versus, maybe I'll go on, maybe I won't. Kind of a feel. Let's see, occasional sales. For a hobby, we're looking at, are you making consistent sales? Even if you're just starting, and consistent means 1 sale a week, versus, maybe I'll make a sale, maybe I won't, doesn't really matter. That's more of a hobby. No schedule, and just for fun. So we kind of talked about those. One of the things you may hear a lot about is, well, if you've made a profit in any of the 3 out of the 5 years. So people who may not be really versed in the IRS rules, this is the common thing you'll hear. Oh, if you've made a profit in any of the 3 out of the 5 years, then you're a business. And that could be true. That is one of the things the IRS is going to look at. They're going to look back and say, okay, if you've been doing this for a while, you say you're a hobby, but you've made a profit 3 out of 5 years, we're going to start to lean towards the business side. That's what they call the IRS safe harbor rule. That's just kind of one of those rules of thumb, but that's not the only thing that we need to be concerned about. Let me get down, and we're really going to dig into the key identifiers. So let's talk about our key identifiers. So intent and purpose. Let me see, how many do we have here? Let me give you an exact amount. I wrote them, got them all written down here. There are 6. So we're going to talk about 6 key identifiers that this is what the IRS has spelled out in their regulations that they are going to judge you by to determine if you are a hobby or a business. Now, again, I'm going to go back to what I was saying at the beginning. You don't want to wait and let the IRS make this decision. You want to take these factors and decide for yourself and report your income appropriately well before the IRS gets involved and starts looking at you. Usually what happens is people will say, this is a business, but it's truly a hobby. And there's some tax differences on what you can and cannot write off. And the IRS is going to come behind you and say, hey, wait a minute, you wrote all this off. I don't think you're a business. I think you're a hobby because of these factors. Now we're going to go back and charge you for all those taxes you didn't pay us. So this is why it's important, is to understand this and make that decision for yourself ahead of time and know what support you need in order to prove this if you're questioned by the IRS. So let's dig into it. Hobby versus business for IRS purposes. So your intent and purpose. This is one of the factors that the IRS is going to look at. What is your intent and your purpose of doing business? So if you're a business, you're in this to make money. You price stuff strategically to make money. You track your cost and you're thinking about your growth. So versus a hobby on intent and purpose is you do it mostly for fun. You like collecting. Maybe you're just decluttering your house and any money you make is just a bonus. Okay. So that's one thing when you look at intent and purpose. Let's look at an example of this. For a business, I bought these vintage postcards at an estate sale and I'm going to resell them. I purposely went to this estate sale, found these items and knew in my mind I can resell them. That's a business intent and purpose, right? Whereas a hobby, I'm just selling off a few things from my house, a few postcards from my personal collection. Very different mindsets, right? Now you're going to say, oh, well, the IRS doesn't know what's in my head, right? They don't know what my intent and purpose is, but your actions will define your intent and purpose. And by the time the IRS gets involved, they have a year, usually, because you're filing a year in retro, right? To look at what your intent and purpose was. You know what, you guys, I had some giveaways. Before I get too far, let me do a giveaway real quick. All right, so our first giveaway, I have some Halloween postcards. I just think they're adorable, so that's our first giveaway. That's up and going. All right. So that's intent and purpose. That is one of the things that the IRS is going to look at. What's your intent? So everybody in the chat right now, what's your intent? Right off the top of your head, fun or money? Because we're going to start walking through this. As we go through, I want you to each answer the question. Okay, so we have some fun, we have some money. So if you say fun, you're kind of thinking I'm a hobby. If you're saying money, you're kind of thinking you're a business. So let's see if any of that changes as we go through all of these. Both, but money first. So I agree both, but if money's first, that's more of a business perspective. But again, they don't just look at one thing. They look at all of these in conjunction with each other. All right, so let's go on to the second one. Do what you love, the money will follow. It's still a money focus though, right? Okay. The second key identifier that the IRS is going to look at, you're not sure anymore. I feel you. I feel you on that sometimes. All right. Record keeping and organization. So the second big identifier is record keeping and organization. So if you're a business, hopefully you're keeping receipts. You have some type of spreadsheet or a notebook and paper or a software program. It's taken over. Yes, it doesn't. Whatnot takes over everybody's life. But you're tracking your sales somehow, right? You're tracking your expenses and your sales if you're a business.
No kidding.
No matter how you're doing it, pen and paper, computer software, Excel, however it is, but you're tracking it. And you know how much you're making or losing if you're a business. You should. Even if you're not really good at accounting, at least you have some concept of what you are or not making if you're a business. But if you're a hobby, if you're doing this for fun, you probably don't know if you're making much money because who cares, right? You're doing it for fun. So you're not tracking your cost. You're not tracking your profits. You're not looking at your whatnot analytics if you're here for just a hobby and fun, because those don't matter, right? You're here just to socialize, maybe sell something every now and then, get a couple of bucks in your pocket. So that's the difference between when you're looking at your record keeping, if you're a business or a hobby. So for an example, real life example for us, business, I know my cost per item. I know my shipping expenses and my profit margin. Very business focused. But if you're a hobby, I sold it for 20 bucks. I don't really know how much I spent on it. Big difference in the approach. Okay, knowing this, knowing that for the business now we're looking at our tracking, our accounting and record keeping. Put an emoji in there if you think you are a business. We still have some people saying hobby. Do you pay more taxes if it's considered a hobby? Yes, you do, Moody. That's the whole point of this. What about cash transactions at garage sales? Cash transactions at garage sales, are you talking about you? We're still on the I don't know. Okay, we're going to keep going through these factors. If you're talking about when you buy at a garage sale, you can just keep a notebook. Just as long as you're keeping record, that's good enough. What you spend, yep. So that's just as long as you are keeping some type of record and keeping it consistently, that's good enough proof. But now, if you're going to garage sales and you're writing down what you're spending, that's a business approach, right? If I were the IRS, I would say, you wrote down everything you spent at a garage sale? That sounds pretty business-like to me. Versus if it's a hobby, heck, if I don't even know how much cash I just spent over there. I just got some stuff, right? Okay. The third thing they're going to look at, the third key identifier that the IRS is going to look at is time and effort. So if you're a business, are you putting in regular hours? Do you treat it like a job? Do you treat it like work? Do you treat it like this is something that you're serious about? And are you continually trying to learn ways to improve what you're doing? So this is what, if you're doing that, yeah, if you're putting in those regular hours. I mean, I get up every morning, 4:30, 5 o'clock. I'm putting a couple hours in whatnot, do my day job, and then a couple hours at whatnot at night. I'm putting in my time. I'm treating this like it's a business, right? Or do you just do it occasionally when you feel like it, or if your closet gets too full and you need to clear out some of your clothes? Moon Magic, congratulations, you got that Halloween postcard. Thanks for being in the show today. Let's see, I feel like I don't have a choice, don't want to lose traction. So that's more like a business, because you're like, hey, I got to keep my customers interested, right? What if I've totally not done a good job at tracking? That's okay, you can always go back. We'll talk about that in future shows about record keeping, but we can always recreate. Do you have to give the government tax money for selling clothes you already bought? Yes, you do. Yes. Everything is taxable. You pay income tax on everything, regardless if this is a hobby or a business. We're going to get down, after we go through the key identifiers, we're going to talk about the tax implications and what it looks like to pay taxes as a hobby versus taxes as a business. Okay. So time and effort, that was our third one. The fourth key identifier that the IRS is going to look at is your financial risk. So if you're a business, you have money invested in this in some way. You have bought something for this business, whether it be a phone, a thermal printer, other supplies, inventory. You've bought stuff, tools, supplies, and you expect a return on that money. When you buy something in your head, you're thinking a ring light. So if you're buying these things and you're thinking, oh, one, if the words "this is a write-off" are running through your head, that's a business perspective, okay? Stickers, all of that stuff. If you're buying those things and you're hoping there's a return on investment. Tipping, why do I buy stickers? Usually because they have my company name on it and I want to advertise, right? Why am I buying a ring light? To show my products in a better light to get more money. If you're just doing this for fun, do you really care? If you're just emptying your closet, or I got too much on my shelves, or I want to redecorate and I'm going to sell this to get more money to go buy new stuff. Do I really care? Thank you so much for the tip. I appreciate that. If you're buying sponsorships. So these are the things you're spending money on where you can start to see, oh, I'm really starting to treat this like a business, not a hobby. Again, let's go back to our accounting. You probably aren't even keeping track of any of this if it's a hobby. Okay. So when we talk about time and effort, an example for business, oh, thank you so much. Everything's appreciated. So an example for the business, I go sourcing every weekend and I run live shows 3 times a week. That's time and effort. Ring light to get rid of my wrinkles. Love it. So from a business perspective on time and effort, if you go sourcing every week and you run shows 3 times a week, that's a significant time and effort that you're investing versus hobby. I hop on every once in a while when I find something cool. Yes, mileage, your mileage is a business expense. If you're tracking mileage, you should be tracking mileage. But if you have a mileage log, you're going to be hard pressed to convince the IRS that you're not a business. Because why else would you be tracking the mileage? Okay. So that was a third one. Fourth one. Oh, financial risk. So we're talking financial risk. Business. I spent $500 on a bulk card lot expecting to triple it. What are you investing that finances into? Or a hobby? I just listed some old cards I already had sitting around. Okay. So you're seeing that mindset is different. Do we want to convince them we aren't a business? We're going to get to that, Moody. I want you guys to think about as we go through these factors, where do you lie? Are you a hobby? Are you a business? If you have to evaluate your activity based on these IRS factors, what do you think you are in your operations on whatnot? The fifth one, we go back to that 3 out of 5 years. It's the IRS profit test. If you have made a profit in any of the 3 out of the last 5 years, that's going to be a strong indicator that you're a business. But even without that, that's not like a necessary thing. This isn't just one or the other. These are all of these factors kind of playing together. Even without that, you can still look like a business if you haven't made money. All right. The final thing we're looking at, the 6th IRS factor, is the tax treatment in this. Okay. So this is what Moody was getting at just a little bit ago. What do we want to convince them we are? You want to convince them you are whatever you truly are based on these factors. So all income is taxable. We've already determined that. If you're a business or if it's for a hobby, it is taxable income. You're not going to get away from the tax part of it. However, if you are a business, you can deduct your legitimate business expenses. We've been naming them throughout here. If you are a hobby, you cannot deduct any expenses. So, for example, I'm a business. I made $1,000. I spent, $200 for the cost of goods and another $100 on all my shipping supplies. I have a $700 profit, but I have $300 in expenses I can deduct. If I'm doing this as a hobby, I made $1,000. I'm getting taxed on $1,000. Now, there's good and bad to both of this, right? So if you're a hobby, you can't deduct any business expenses whatsoever. All those boxes you bought, all that bubble wrap you bought, the tape you bought, that Rolo you bought, and you're a hobby, those are just your personal supplies. That doesn't mean anything. No deductions for that. But you also don't have to pay self-employment tax. So there's good and bad to both of them. If you're a business, you get your revenue minus all of those expenses, but then you still have to pay self-employment tax. Okay? So there's good and bad to both. Now that you've heard some of these factors, from the very beginning when we first started saying, are you doing this for fun or to make a profit? What do you think you are? Just kind of throw it in the chat. Do you think you're a hobby or do you think you're a business in the eyes of the IRS? And has anybody changed their mind? Because I'm seeing a lot of business now and not so much hobbies. At first, we had a lot of people saying, I'm doing this for fun. But are you really? It may be fun, but is it really in the eyes of the IRS fun? I think you're dead. So, and it's not even that you become a business. You just are a business. The minute you start to exhibit these behaviors, these factors that you fall into this, the time and effort, you're tracking your expenses, you're tracking your revenue, you're thinking about ways, things such as, I do a show at 7 every morning, but you know what? I tried to do one at 7 at night, and my nighttime show made me so much more money. Maybe I'm going to start doing more shows at night because I'm making more money there. That's a strategic business decision. The minute your mind shifts and start thinking like that, all the rest of your actions start following in a business format. Whereas if you are just a hobby, who cares what time you go on? Who cares if I'm just cleaning out my closet, right? And Timeless Charm Co., you've just hit it on the head right there. A lot of people start as a hobby, and then eventually down the road, it just morphs into this business. And this is why, one of the reasons I picked this topic for tonight, because I think it's a very common occurrence here on Whatnot. So now if you're a newbie and haven't made $1,000 yet, should you become a business or wait until you have more profit? So Tater and Tot, I haven't answered to your question, but I'm curious, when you say become a business, what does that mean to you? So I'll wait till you tell me what becoming a business means to you. Like what do you think that is? Get a business license. All right. Depending on the state you live in, most states and localities, sometimes there's local, like city laws too. So you've got to look at that. Most states and cities do not require anything to be in business. All I need to be in business on Whatnot is my phone and internet service, right? And something to sell. And I'm in business. So unless your locality requires it, just the act of you doing what you're doing on Whatnot could classify you as a business. I'm just starting really tracking inventory last month. Okay, good. What I thought you might have been referring to is getting an LLC, which is my hot topic, my soapbox thing. Okay, yes, an LLC. You will hear, and there's even other bigger sellers on here will say, oh yeah, get an LLC. If you get QuickBooks, you're going to see a thing on QuickBooks that says, let me help you set up your LLC. When you do TurboTax or when you do any of these programs, I'm sure there's some little advertisement, let me help you get your LLC, right? Don't certain states say that for it to be a taxable business, it has to reach a certain amount? Nope, if you are actively engaging in these factors, you're a business and it is taxable. You don't have to make a certain amount for it to be classified as an active business or a taxable business. Now, there are tax thresholds. We can talk about what the tax thresholds are.
It is multicasting on YouTube.
Yes, it is on YouTube. You guys don't need to buy anything to rewatch. You can always just go to YouTube. We multicast there, so it's all saved there.
So if you miss anything, you can go back and check it out.
So let's get back to the LLC thing. We have Marsha Ritaville, my current CBA says no to an LLC for my real estate business because I don't make enough. It's not always that you don't make enough. That could be a factor. So what if you show a loss for this year because you just, that's fine if you show a loss. You can still be considered a business and show a loss. Let's talk about an LLC real quick. There's nothing wrong with an LLC. An LLC is a limited liability company. However, it is not necessary all the time. There are each one of us has a unique set of facts and circumstances that surround our business activities. What are we selling? What are we doing? What property do we own? What are our goals? Do we have a warehouse? Do we not have a warehouse? What kind of liability do we have as a business? There are a lot of factors. Do we have partners? Are those partners our spouse or an unrelated person? Do we plan to grow and need investors? There are a ton of questions surrounding the whole concept of creating an LLC. So there is not anybody on Whatnot that is going to be able to tell you definitively you need to go and get an LLC. And if they do, I'm here to say they're just flat out wrong. They don't know what they're talking about. It may be what was best for them because of their unique sets of facts and circumstances. but it is not necessary in order to do a whatnot business. Now, what I do say is every single one of us should go have a CPA, financial advisor, and an attorney if you can get all three, if not at least one of those, that could give you true advice, could sit down with you, understand all of your facts and circumstances, where you want to go, what all the investing stuff, like all of that, and give you proper advice on an LLC. There is absolutely a time and place where an LLC makes 100% sense. But if it's just because I want to do whatnot, that's not enough of a reason to go to the expense of an LLC. Now, when I say an expense of an LLC, you have to register with your state. There is an annual fee that you have to pay. You may have to register with your locality. If you want to dissolve your business, then you have to pay to dissolve your business. There's more effort, expense, and annual reporting that's involved with an LLC. It's not just, I'm going to create one. Additionally, for tax purposes, if you are a single member LLC, and when I say single member, that means you if you're a single person, or you and your spouse, if you file a joint return, is considered a single member. If you are a single member LLC, your tax treatment is no different than you as a sole proprietor. A sole proprietor is, hey, I'm Tracy, I'm going into business today. Now I'm a sole proprietor. Thank you so much. I appreciate that. And we talked about the chauffeur loss. And we talked about, if you're an LLC, about making enough money. How much you make, how much you intend to make, that's part of the equation. But again, the LLC is a multitude of factors. And this is my soapbox. Like I get every time I hear it because it's just so common. I heard it the other day in a chat show. A seller that gets quite a few people in their room was like, well, I created my LLC. There's a PDF telling you how to create your LLC. Go read it. And it's nobody on Whatnot is going to be able to tell you if you should or shouldn't. There's just too many personal factors around that, unless you have hired them as a CPA, a financial advisor, or an attorney. I'm missing stuff. Let's see. Would it be considered resale? So maybe some states don't tax on that. No, not all. There's not state tax in all states. There's 6 states that have no state tax, but the income you make is, for a federal purposes, always taxed. So do you need a business or vendor's license to sell on Whatnot if you're a business? You do not, unless your locality requires it. And that's far and few between. Without becoming an LLC, you can still deduct your shipping cost, everything. Yes, Tater and Tot. If you're not an LLC, you're what's considered a sole proprietor. All the same tax treatment's available to you. All the same business expenses are available to you. My home office expense, my mileage expense, my cell phone, my internet, my bubble wrap, all of that, shipping supplies, ring lights, subscriptions, if you do Vendu, those type of things. If you do Spotify to get the royalty-free music to play in your shows, all of that is a business expense, whether you're an LLC or a sole proprietor. There's not a big difference there. There's very few situations where an LLC offers a tax benefit. And usually that comes when you have unrelated business partners. What about purchasing wholesale? You can still purchase wholesale now. Sometimes wholesale will require you to have an EIN, which is an employer identification number. And you can go to irs.gov and get an employer identification number. All that is it's like a social security number for business. In layman's terms, that's what it is. It's a tax identification number for a business. But you can get that as a sole proprietor. Thank you, Tater and Tot. I appreciate you. All right, so I kind of went off on a tangent on LLCs. I knew it would happen. I always get it. The main thing with the business versus hobby is there is no write-offs. And I hate the word write-offs, but if you're a hobby, you don't get to write off any of these expenses. You're not doing it to make profit. So who cares? If you're not doing it to make profit, who cares about the expenses, right? You're just selling stuff every now and then. Versus, I have some of these factors. I'm putting in time and effort. I'm keeping accounting. I want to make a profit. All of that. One way to kind of summarize this and pull it all together, when the IRS is looking at this and when you're looking at what are you a hobby, are you a business, it's substance over form. Don't know if you guys have ever heard that saying. In accounting, we use it a lot. Substance over form. What's the meat? What's in the middle of that sandwich, right? It's not, here's a sandwich, that's the form. Okay, what kind of sandwich is it? That's the substance. So that's what we're talking about here. Yeah, I'm selling stuff on Whatnot, but what's the substance of what you're selling? What's my intent? What's my time and effort? How do I keep my records? Okay. So that's like a whole lot. Let me do another giveaway real quick. Take a breath here and do a giveaway. All right, we've got another Halloween postcard. Look at her. Isn't she adorable? Look at that little girl. That's up and running right now. So when one of the things is there something that you recommend for tracking expenses? Yes. So this is going to sound weird coming from a CPA. I think a lot of CPAs would be like, oh, use QuickBooks, use this. I say use what works for you. Use what you're going to use. If you are a computer person and you love pushing all those buttons and you like all the screens and the reports, by all means, there's QuickBooks, there's Reseller Genie, there's a ton of accounting software that you can use. But if you keep your taxes, so there's other things out there. If you're not a computer person and you try to use QuickBooks, what's going to happen? You're going to start dreading it. You're going to start procrastinating taking care of your accounting because I don't like it. I don't like all the screens and stuff. Use what works for you. You may be a pencil and paper person with a notepad. If that's what works for you, use it. The most important thing is that you're tracking it in a manner that you're going to do on a consistent basis. And that's going to look different for everybody. QuickBooks, you have beef with QuickBooks. I have beef with QuickBooks Online. I'm old school. I don't know how many of you, I have been around a long time, and QuickBooks used to be a desktop, like you would have to buy it on a little disk and install it on your computer. And that's how I learned it. And the online version is completely different and I don't like it. I still use it, I just don't like it. But for tracking purposes, Google Sheets, you can use Google Sheets. Use what works for you. Now, I am going to say, should be keeping record. What exactly should you be keeping records on? So there's three main things you want to keep records on. Revenue, what's the money coming in, right? So how much are you selling? That's a big one. Expenses, and that encompasses a lot. So when I say expenses, it is all of your shipping supplies, all of your online subscriptions. There is a PDF I have in here, in case you're interested, all about accounting and tax. I'll pin it. Eventually, one of these talk shows will cover all of this, but that goes into a lot of those expenses. But anything you spend money on that's a business expense. So keeping track of all your mileage, anything shipping, your ring lights, your cell phone, if you're buying equipment for the business, if you buy a camera, if you buy a TV, because like me, I can't read little print, I need something big, all of that, you keep your expenses. The third thing to track is your inventory. And I'm going to take this off the screen because it's so big here, sorry. The third thing to track is your inventory. There's 4 pieces to inventory. Your starting, what you add to it, what you take out of it, and what your ending inventory is. For tax purposes, you have to know that ending inventory every single year. And there's different ways to get into those numbers. I started a vintage store that had its own website for inventory, and I have been struggling with my inventory that is separate. This is all, well, I'm glad it's helpful. That makes me feel good. So can you come to Michigan and be my CPA? I would love to. If I ever, full transparency, I work for a very large accounting firm, and part of my agreement with them is that I am not allowed to provide tax or accounting services to anybody else, mainly because I work in auditing and that impairs our independence as auditors. However, if I were ever to do something on my own, that would be something I would do, would be to try to be a CPA for resellers. But It's not something I can do at the moment. This is as close as I can get. I can do chat shows on the thing I love, which is tax and accounting. I know geeky, but it is what it is. I'll come to Virginia first. You're not far from me. Virginia is not too far. So let's see, what was I talking about? Okay, inventory. There is an inventory PDF in there too that talks all about inventory, but those are the 4 things you need to track for inventory. I'm struggling with figuring out inventory for crafting. I have been costing every item and keeping track of receipts. Hopefully that is more than enough. Yes, costing every item. So it's really understanding it in whole. When we talk about inventory, a lot of it comes down to how you should do it is what you're selling. If you're buying like a liquidator and you're buying huge pallets of stuff, you're not going to go through thousands of items or hundreds of items in a pallet to get the exact price on each and every item, right? And Onyx and Opal Vintage, I like flashed so quick. You got that vintage postcard. Congratulations. Thanks for being here. So when you're looking at inventory, like I said, if you're buying a pallet, you're not going to cost everything at each individual item. You're going to do an average. You're going to say, oh, there's 1,000 items in there. I paid $1,000 for this pallet. Each item's about $1, right? So there's different methods of keeping track of your inventory. As long as you're consistent, that's the main key, is consistency. You're not going to have a problem. And honestly, I do track, but I'm very loose about my tracking. As a CPA, I'm very loose on how I track it. So those of you who've been in a few of my shows, I give this speech all the time about inventory. 4 parts. And I'm going backwards for you guys. I should start over here. What you start with, your beginning inventory. If you were just starting out, your beginning inventory was 0 because you should have had nothing, right? If you've been in business already, your beginning inventory is whatever your accountant put on your tax return last year. That's your starting number. No matter what any you think it is, use that number because that's what the IRS has. Match their number, okay? So what your starting number is, what you added in. That's really easy. What you add in is everything you bought, all those receipts, so the cost of everything. Now, it's the cost of what you paid for it and what you paid to make it sellable. So for crafters, it's a little bit different than for me as a vintage person. Because for me as a vintage, I can just buy something and sell it. I don't really put any more money into it. But as a crafter, you may buy 3 or 4 different supplies, have to put it together. So you're adding different pieces in together. That also includes shipping. If you're a person who buys pallets, that freight coming to you is part of that cost, okay? So what you bought, and then what you sold, what went out, what's the cost of the items that you sold? This is the piece that a lot of people don't track, and that's okay, okay? It's fine if you don't track what goes out on a regular basis, because at the end of the year, you're going to get to what is your ending inventory, and it's a simple formula. Beginning plus additions minus subtractions equals the ending. So even if I don't know what went out, I can back into that number. It's a very simple math formula. You can always get that number. I am selling some items in my personal collection over years of collecting. No receipts. How do I put $1 on those items for cost? So those would be market value, whatever the market value is, or if you know what you paid for it, you can estimate what you paid for it. Now let's talk about if you're selling items from a collection versus items that you have purchased for inventory. Your items from a collection are not part of your Schedule C. They're not part of your business inventory. Those go on a different form on your personal tax return. They're taxed differently. They are, for simplicity purposes, they're taxed like a stock, like a long-term asset. It's either short-term or long-term asset. So those are taxed items from your personal collection. You collected baseball cards since you were a kid. Now you're an adult, they're worth a lot of money and you want to sell some of those off. Those are taxed completely differently than I went to the thrift store, I bought a bunch of stuff to resell. They're not part of your Schedule C. They go on a Schedule D. Does the same apply for clothing? Yes, it does. Yes. So if it's personal, it's taxed completely different. How can you touch on tax exempt when you buy stuff? Am I even saying that right? I heard something about saying they weren't tax exempt on whatnot. Okay, so tax exempt means that's a state thing. So you pay sales tax. So first of all, let's just define what the different types of taxes we're talking about. We have sales tax. Sales tax is a state and local taxes. Depending where you are, every single state has sales tax that I'm aware of. And it's usually 6, 7, 8, 9%, maybe higher in California or some of the more expensive states. That's sales tax. That's handled by the state. Sometimes there's also a locality tax. I know in Florida, every county has an additional tax. Then we have, that's a sales tax, and we have state tax, state income tax. All but 6 states in the United States have state income tax. Florida, Texas are the 2 big ones. Florida, Texas, Tennessee are the ones that come to mind. You do not pay state taxes in those states. Then we have federal tax. Most of what I'm talking to you about is federal tax. Why is it federal? Because that's one set of rules. As a CPA, I'm very familiar with those rules. I can tell you a little about Pennsylvania state tax because I'm in Pennsylvania. It's something that I deal with. But I can't give you advice on Arkansas state tax. There's too many states with too many different rules. However, generally, state tax follows federal laws. They're usually very similar. There's always some differences. All right, so those are the 3 taxes. So what you're talking about for a tax exempt is on sales tax. You can apply as a reseller, get a tax exempt certificate from your state saying, hey, I resell these items. So when I buy them, I shouldn't pay tax on them because I'm just the middleman. My customer is the ultimate taxpayer for sales tax. So that's a sales tax exempt certificate. You don't have to have one to be in business. That just means you're paying the sales tax. You can definitely get one, save yourself a little bit of money. It just depends. It's not an indicator if you're in business or anything like that. It's more of the volume that you're buying and if you want to pay the tax on it. Now, logically, you would say, hey, I'm going to save myself money in any way I can. I'm going to be honest with you. I don't have a sales tax exempt certificate. I keep putting it off. There is regulations that go with it or reporting requirements. So there's quarterly reporting requirements that go with it. I would rather just pay the sales tax than have to deal with the reporting requirements. Would I be paying more tax for Schedule D items and Schedule C items? Yes, because there's no deductions. So absolutely, yes, you'd be paying more for those. In Texas, we can contact our comptroller for information on sales tax. There you go. Yep. Most states you can too. If you just Google state sales tax, it'll take you to like whatever local office would deal with it. If you just joined, let me just kind of catch you up real quick. My name's Tracy. This is Zoe's Treasures. This is our first Tuesday night tax and accounting talk. I did a lot of tax shows last tax season. And now that we're getting close to the year end, we're going to pick them back up. Tonight, we're kind of focused on hobby and business, but I'll answer any questions that you guys have if I can. I try to answer them. And then every week, I'll bring a new tax subject to you to talk about. Will there PDFs be in your shop after this show? I need to add my business debit card and I don't have it with me. I can make them available. I usually only have them on my chat shows, but I will make them available in my shop as soon as the show's over. Yeah, I usually just put them up during the tax shows. I do want to talk about one PDF. It's not tax related, but if you guys are interested, I'll pin it really quick. Do not buy it. I put on there, don't buy me. This is all about 22 whatnot tools. So this is one that I developed. I do not charge for this. This is free. All you have to do is DM me your email address. And sometime tomorrow, probably because it's late tonight, I will just email you this. It is a 14-page PDF and it covers 22 very common whatnot tools with ways you can use them strategically and in combination with each other. It's kind of one of my favorite things about whatnot. And it is absolutely free. So you don't have to buy that. Just DM me. Just send me your email. Let me unpin it. I don't like all the words at the bottom of the screen. It bugs me. All right. So we talked substance over form, making sure that you're treating this if it's a business. If you think about it in your head, make sure you're evaluating yourself. Are you in it for business? Are you in it for a hobby? And that you're doing the right things come the year end.
And if you're just joining us, stay with us if you have any questions. And then you can rewatch on the YouTube channel. We're multicasting.
All right. And we're going to do another postcard giveaway. This one is for a little ghost. We're going to give that one away. That's up and going right now. Let's see. So glad I found the show. Well, I am happy you found me too. I don't know where to begin with taxes as a new seller. I read you don't do anything if you don't hit a minimum income amount. So that's a really great point. And this is something that's actually changed this year. So this is a law that it's been in flux with the IRS and it just changed. I don't talk politics, but it is one of the bills that were just passed by President Trump. And that's as much politics as we talk. We're acknowledging he is our president. He passed a bill. Other than that, no politics, no religion in my show. But it used to be that going into 2025, if you made $6,000 or more, the IRS, or sorry, not the IRS, Whatnot would send you a 1099. That's the form that Whatnot reports the money you made to you and to the IRS. With, what is it, the Big Beautiful America Act, or I'm probably slaughtering the name. A Big Beautiful Act, I think is what it's called. It was put into place just a couple of months ago. That threshold got raised for 2025. Whatnot now does not have to send you a 1099 unless you make $20,000 and 200 sales or 200 sales. So if you make more than $20,000, Whatnot's going to send you a 1099. Now, that kind of doesn't matter because regardless of what Whatnot sends you, you as a taxpayer are responsible for reporting all of your taxable income. If we go back to very basic taxes, you have your taxable income, all the money, if you have a job and you have a W-2 and they give you the W-2 at the year end, or you make money from Whatnot or eBay or whatever it may be, you have to report that. You get a standard deduction. You're either single, you get a deduction, you're married, head of household, there's some type of standard deduction. That comes off of that income, and that's when you start working down to what's taxable. If you make less than the standard deduction, you're not going to be taxed on that money. You still must report it. There is also an IRS regulation that says, and they call out reselling, online reselling specifically in the regulations. It says if you make $300 or more selling online, you must report that income to the IRS. So whether you hit $20,000, whether Whatnot sends you a 1099, it doesn't matter. The number you have to keep in your head, if you look at any sites you're selling on, if you have $300 of revenue, you have to report that money. You may not owe taxes. Your standard deduction is going to wipe it out. You probably won't owe, but you have to report it. So it makes sense. So I won't have proof with a statement unless I hit that minimum and I have to calculate. Correct. So this is why it's so important for you to keep your own accounting records. The other side of that is, how many people have experienced a Whatnot issue? A glitch, something with shipping wasn't right. There's a lot of us. At some time, if you're on Whatnot for more than like 3 months, there's going to be something that's not right, okay? Something that you have to contact Whatnot help for. So you should be keeping your own accounting records, because if Whatnot sends you that 1099, you should be matching what you make to what Whatnot reports to make sure it's correct. You are responsible for your money. Did you say $20,000 or a certain number of sales? I may have misheard you. Yes, or 200 sales. 20,000, I think it's 20,000 and. I need to go and look, because with the IRS, and or are very important. Words matter with the IRS. I will clarify that and bring it to my next show. Off the top of my head, I want to say it's or. So if you made $20,000 or had 200 sales, Whatnot has to send that to you. But let me go and double check it. I'll bring that back to you guys next week, if it's an and or an or. Oh yes, Whatnot never glitches, never. Honestly though, you guys, that's why, I mean, we'll get into, as the weeks go on, we'll talk more about like keeping records, ways to keep records. I do have a PDF that talks about finances and keeping accounting records. If you're interested, no pressure to buy anything. It's just there. But I'm not going to depend on Whatnot. This is my money. I need to be on top of it. Besides which, we're a business, right? Unless you're a hobby. If you're a hobby, none of this matters. You don't care, right? But if you're a business, I don't want to wait. Custom wood burning, you won that giveaway. Congratulations. That Halloween postcard came to you. I don't want to wait until the end of the year to know where I stand financially. If you're a business, you should be knowing that on a regular basis. Weekly, monthly, quarterly at the least. Do we keep track of the actual payout or the sales before they take fees? Because what Whatnot is reporting to the IRS is before any fees. So on the 1099, if it's 20,000 or more and they give you this 1099, that number is before they take out fees or any shipping or anything that they deduct out of your ledger. It is that gross amount. So if you have sales near the end of the year, but don't take the payout until after the first of the year, is that income reported? Yes, you should report it. Now, there may be a slight difference. If you have sales on December 30th, the credit card transactions, because most of everybody has put some type of credit card into Whatnot, may not clear until the second or the third. So what Whatnot reports, there may be a slight difference, but you should still report it. Oh, thank you, Custom Wood Burning, for being here. I appreciate you stopping by, and thank you so much for the shout out earlier. That was so sweet of you. So Crystal's Vintage, just to kind of clarify that again. So I fully expect if you make more than 20,000 and you get a 1099 from Whatnot, I fully expect that the number you have in your accounting records may be slightly different than what they report. And that's okay. If it's a minimal amount, $100 here or there, that's all right. Report whatever the highest number is what you should report. If it's significantly different, though, if you know without a doubt, I made $21,000 on Whatnot this year, and Whatnot sends you a 1099 and says you made $50,000, that's a huge difference. That's when you need to start digging in and figuring out, well, you can't fight that with Whatnot if your records aren't in order, right? So make sure your stuff's in order. All right, any other questions? Because we've really covered hobby. I want to give you some examples. But if I have sales, so I have money in Whatnot account that won't pull my money out until after the first of the year. What year is it reported? You reported in the year you earned it in. So again, Whatnot, there may be a slight difference in what Whatnot says and what you say, but that's going to be minimal. It shouldn't be thousands and thousands of dollars. Because you're only talking about the sales that occur the last day, maybe 2 days of the year. So unless you made had a blowout New Year's Eve sale, it's not going to matter on your taxes. But you report the money you made. So if you know you made $500 on New Year's Eve, but Whatnot doesn't report it until January 3rd or 4th, still include that $500 in your income because you're reporting it as you earn it. And that's the difference. We get into cash versus accrual, which I'm not going to go here. Eventually, someday we'll talk about it, but that gets really deep into accounting. Because you still earned it, you just didn't transfer it. Exactly. There you go. That sums it up very, very efficiently. Don't forget to mention that the fees are a tax. Fees are a tax deduction. Thank you, Crystals, for bringing that up. Yes. As a follow-up, yeah, all the fees are a business expense. I said earlier, I don't like the words write-off. So write-off and business expense are kind of the same thing. I don't like you'll hear people say, oh, it's a business write-off. It's a business write-off. Yeah, it is. It's not wrong to use those words, business write-off. But for me, it has this connotation. I hear people say it in a way like it's not real money. Oh, it's a business write-off. Like it's something for free. Like, oh, I bought this glass. It's a business write-off. It's still money you spent. It's still an expense to your business. So I try very hard never to say write-off. I still do. But I'd like to emphasize they are business expenses. I definitely won't hit 20K, but realistically would hit 200 sales. Yeah, and what percent of sales do they take out for taxes so I can prepare? I would suggest you go back and look at what your tax bracket was last year. look at what tax you paid compared to your income, and that'll give you a percentage, and plan for that tax bracket. Unless you make significantly more on Whatnot, like it was just a whole lot more, but you're saying you probably won't hit 20K, and I would put that aside. So if you are typically, if you go back and look at your last year's tax return, and you have the taxes you paid were about 20% of your revenue, of the money you earned, I would then, from my Whatnot income, be putting about 20% aside. Now, we can get into the whole thing about paying quarterly taxes, estimated taxes. Yes, there's times when you have to pay it. It's not always necessary. That is probably a whole 2-hour show in itself. I will put that coming up very soon, probably in the next couple of weeks, to make sure that's a topic we cover. There's just not enough time in the evening tonight to talk about it. It is a loaded topic. But to answer secondhand, what is the end of that? Secondhand Saranda. Go back and look at what your tax bracket was last year and put that aside as a safety measure. It never hurts to put a good 20% aside of all your profits. So you're talking about this, and I haven't seen anyone answer these questions. Oh, well, thank you so much. I am going to be here every Tuesday night. I said 8:40 tonight. I have mom duties until about 8:15. So it'll be between 8:30, 8:40 every Tuesday night. I will be here. And then also on Fridays, I do a chat show. It's not so much tax and accounting. But if Friday mornings at 7 a.m. is better for you, feel free to always ask questions in that show too. That's more of like a seller, buyer, general, Whatnot kind of show. I want to give you just a couple examples before we wrap up. We'll go for a little bit more and see if there's any other questions. Hobby versus business. I just want to give some practical, real life, like on Whatnot examples that are kind of aside from those IRS key indicators I said. So if you are a creative, you're a handmade person, and you like to paint, and you do paintings and you give them to your friends, and maybe you make one for your dad at Christmas time, that's a hobby. The minute you come on Whatnot and you start selling them and you start creating to sell on Whatnot, that becomes a business. As a hobby, I'm clearing out my closet. I got too much clothes. It doesn't fit. Things I got older, went up a size or two. Now I need to get rid of some of those smaller sizes. I'm cleaning it out. That's a hobby. I'm buying a pallet of clothes, or I'm actively going to Goodwill sourcing for clothing. That's a business. Final kind of thought on that. Think of it like this. A yard sale is a hobby. A storefront is a business. So what are you doing on Whatnot? Are you having a yard sale, or are you a storefront here on business on Whatnot? And that kind of gives you just a general feel. And then you can start digging into those IRS factors to say, oh yeah, this is really starting to look like a business or hobby. And just to kind of wrap that up, the whole reason why all that is important is, as a business, you can deduct business expenses, but you will also be paying self-employment tax. As a hobby, you cannot deduct any business expenses. So it makes a significant difference on your tax return. And where it starts to really come into play is people will tend to have it as a hobby, but still want to deduct business expenses. So they're really just like cleaning out their closet, and then they go to do a tax return, and they've done 2 shows. I don't know if I'm ever going to do another one. I'm going to deduct all these boxes I bought. And the IRS comes back and says, is this really a business? Nope. Sorry, you can't deduct all that. So now we're going to add that back into your tax return and charge you interest and penalties because you didn't report right. So that's why you really want to focus in and know before they make the determination. And with that, you guys, I haven't been on for about an hour. Okay, Christian. And the difference is, whoa, that went fast. And the difference is determined by the amount you make, correct, or the number of sales. Like, you can't choose to say it's a hobby after that point. No, it could be, you could still make a lot of money and it be a hobby. It's what's the substance of it? Like, I can have very expensive, designer purses that I just don't like them anymore, and I want to go to New York and buy me some new ones. So I'm going to sell off all my Louis Vuitton from my closet so I can go buy me some new ones. That could be a hobby. I can make a lot of money and be a hobby. Or I could be, I'm going to continually sourcing luxury purses to sell because, oh, I like this profit. How can I make more when I start turning it? And then it starts becoming business. When we talked about the dollar amount, that is when whatnot. I wish I don't even own a Louis Vuitton. Here I'm talking like I'm some high roller, not even close. I'm like Coach, and I don't think Coach is considered luxury anymore. Anyways, when I talked about the dollar amount, that's when whatnot at $20,000 sends you a 1099. 1099 is just a form for them to report to you and the IRS that you made some money. What if you treated it as a hobby, but now you realize it's actually a business and you haven't been keeping records? Chatty Wampus, that's a very good question. What I would suggest is to go back and recreate those records as best as possible. And it's pretty easy to do these days because most times we don't use cash as much as we used to a long time ago. So a lot of times you can look at credit card statements, bank statements. Once you know what you bought, then you know where it was, so you can recreate mileage records. So you may not capture everything, but you'll capture quite a bit of it. And then as far as revenue, that's really easy because Whatnot will provide, you can go back and look at your actual reports each month, or you can look in your analytics and see what you made for revenue purposes. So go back and recreate if you have to. And that really only works the first year. So that's kind of like, hey, I'm going to try this out. Oh, wow, I really like this. Oh, wow, that money looks good. And it turns into a business. Thank you, guys. I appreciate you. I am going to go find somebody to raid. I think one of my favorites is on. I will be here every Tuesday again. Thank you, so. Oh, Daisy Lane, look at that with the raid. Thank you, Southern Charm.
Welcome in, Raiders. Grab your hats and step into Zoe's Treasures, where the relics aren't cursed. They are for sale.
All right, real quick. When somebody raids us, we always like to do something special here at Zoe's Treasures. So we're going to do this. Then we're going to go raid one of my faves, which is I Love Discounts. But Daisy Lane, thank you so much. Those of you coming over Daisy Lane, my name's Tracy. This is Zoe's Treasures. We are doing a tax talk tonight. We're going to be doing them every Tuesday night. So please come and join us next week. Are you ready for Daisy? All right. Real quick, when somebody raids
Welcome
us,
in, Raiders.
we like to bring
Grab
up their
your hats
profile.
And step into Zoe's Treasures, where the relics aren't cursed. They are for sale.
And this is Daisy Lane. Daisy Lane is in the middle. She is a newer seller, about 5 months, maybe 4 or 5 months. She is in the middle of a 30-day challenge. She is on every single day for 30 days, and she is absolutely on fire, killing it. I highly recommend her. I like to watch her. She also does chat shows. She had one earlier today. So if you are not familiar with Daisy Lane, please, please, please take a second to check her out. Her next show should be today at, what time is that, 10 o'clock? While you're about to do another show. And there's one tomorrow. Again, she's in the middle of a 30-day challenge, so you can catch her any day this month. And with that, you guys, I appreciate you. Hope to see you in one of my future shows. And we're going to go raid I Love Discounts. Let's go get us some chubby bucks. And Southern Charm, I saw that tip. Thank you so much.